Good evening, friends. I'm Pooja Gandhi from Kirin Advisors. Welcome you all for the virtual IPO roadshow of AVP Infracon Limited. Established in 2009, AVP Infracon Limited is one of the leading Indian manufacturer development company. AVP specializes in diverse projects like expressway, national highways, flyovers, and more. They are renowned for excellence in government contracts and national initiatives. Now, I'd like to invite Mr. D. Prasanna, Chairman and Managing Director. Welcome, sir.
Hi, Pooja.
Mr. Ronak Zaveri, Vice President, Share India Capital Services Private Limited. Welcome, sir.
Thank you. Good afternoon, everyone. Thank you for having me
Mr.
today.
Rajnikant, Managing Director, Aksan Capital Advisors Limited. Welcome, sir. Now I request Mr. Prasanna ji to give detailed presentation of the company. Over to you, sir.
Good evening, everyone. Welcome for the investor IPO meet of AVP Infracon Limited. We are a 15-year-old infrastructure company. We are in the industry from 2009, and we have been incorporated as a private limited company. And now we have in this stage. And
Prasanna sir, you are on mute.
no, can you hear me?
Yeah, I'm hearing.
Okay. And something about AVP Infracon Limited. The slide is on. We are established in the year of 2009, and we are into
Prasanna sir,
multi-domain.
we can't hear you.
Sir, just a request. If you can keep the device little closer to you, I think we'll be in a better position to hear. Yeah, thank you.
Now, how is it audible?
Yes, sir. Now it's audible. Please go ahead.
Okay. I'm sorry. And AVP Infracon Limited, we are established in the year 2009, and we are a multi-domain infrastructure development company. We are into roads, bridges, irrigation, and flyovers. We are also going on into the industrial areas, majorly in the state of Tamil Nadu. And we are planning for a robust expansion in the coming future in the neighboring states also. The next slide. Pooja, the next slide, please.
Yes, sir.
Yes, slight overview about the figures. We have completed around 40 projects as on now, and we have a strong order book of 201 crore. And we have about 235 crore worth ongoing projects. And our revenue for FY23 stood at 106.33 crores, and our EBITDA was 28.41 lakhs. And we have made a PAT of around 1,152.63 lakhs with the ROE of 46.18% and ROCE of 37.04%. At a glance about the core mission and vision, we want to become a world-class construction company in the infrastructure segment and to provide best service in the industry. Our vision is to acquire our position as a market leader in this infrastructure industry and to be our clients' most reliable end-to-end service industry. We have a commitment to provide the best construction service from design till execution, and we provide quality and satisfactory services, and we take our clients' requirement passionately, and we believe in quality and efficiency at all times. Pooja, the next slide, please. Some of our clients we have displayed here: the National Highways Authority of India, Tamil Nadu Public Works Department, Highways Department, MORTH, and our Greater Chennai Corporation. We have been doing greater value works with these clients. And these are all our fleets, what we have, which we use for the road construction and other flyovers, batching plants, graders, the roller soil compactors, road pavers, boom placing machines, backhoe loaders, wheel loaders, transit mixers, tippers, and everything. The next slide, please. Uh, in brief about a key competitive strength, we have very experienced and qualified team, and we have a strong order book. We depend mainly on the quality of what we do, and we have a very experienced management team to take care of all the management activities. Pooja, the next slide, please. And this is our team, and myself, the chairman and managing director of the company, and along with me, Mr. B. Venkateshwarlu, we call him Venkat. He is the joint managing director and the CFO of the company, and the whole-time director, Mr. Vasant, is my younger brother. And the Pooja, next slide, please. Mrs. Bhagyavati, the non-independent and non-executive director of the company. Along with us, the independent directors, Mr. Rajan Ethiraja, Mr. Rajendran, and Mrs. Priya Rao, who have a very strong knowledge about the infrastructure industry. And we have a team of all the eligible engineers who are in the industry for the past several years. And this is all some of the glimpses of what we do. Who's your next slide? These are all the overview of all the projects we have completed in the recent past. You can keep moving. The bridge, latest bridge, what we have completed, it is called as the LC 132, which is in the heart of the city of Tirupur. Please keep moving. This is all about our what we do, the design services, our estimation services, and procurement and construction management services. What we are all, what is the stages of this construction industry, what we take up and what we do, and these are all step-by-step orientation in a project which is involved. Which are the next slide, please? Yeah. This is about the a project. Whenever we start, we have before the start and after the completion of the project, pre-construction services, what we do before the construction activity of the project is initiated. We have a schematic design excellence team which designs the project, and we have a team which goes for the approvals and clearances, and the procurement team which takes care of all the procurement, and but the budgeting team and the client approach team. The budgeting team take care of the entire budget of the project, so that it will be monitored during the entire project implementation, wherein addition of the budget won't be allowed and will be strictly monitored. The execution team, which we call client centric system, the execution team will coordinate with the client and for the proper execution of the project. Once the project is executed and completed, we have a good team to hand over the project in a presentable manner, and we have a very good maintenance team to take care of the project after the completion of the work and handover of the project. Pooja, the next slide, please. These are all the steps involved in the tender stage, from the basis of tender preparation till the experience certificate we obtain from the client. These are all the various steps that we'll undergo stage by stage, A to Z of the projects. And apart from this, we have two commercial sales RMCs which we have established in Tirupur and Coimbatore. These are all the major industrial hub of Tamil Nadu. We have around 50,000 to 20,000 cubic meter of concrete sales every month from these two RMCs. These two are entirely catering to the commercial markets. And apart from this, we have captive RMCs to take care of our project also. some glimpses about the projects which we have completed in the recent last year 2023. This is the NH48, which is connecting Chennai to Bangalore, and the next one, this is NH67, Trichy to Coimbatore NH National Highways. The next one, please. This is the LC 132, which I have already spoke, and this is a breakup. And then the other one is SLM 99. This is Dharmaburi Morapur Road. The next slide, please. And this is the breakup of the order book, and we have given the on date order what we have in our books. The same, you can scroll down. Scroll down, please. The industry overview, as it is known, the Indian budget as second largest allotment of infrastructure funds to the infrastructure segment in the budget every year, just after to the defense ministry. These are all the glimpse of all the projects which will be coming up in the near future, which will be India's aim of reaching this US 5 billion US dollar 5 trillion economy by 2025 in the infrastructure development. Some of the initiatives and investments with regard to the government, in regards to the Urban Infrastructure Development Fund and the Awas Yojana and infrastructure finance, everything. Can we go to the next stage? This is about something about the NHAI. What are all the projects taken up by NHAI, and what are all the transformation that has been coming up in the infrastructure industry, which is giving an impressive CAGR of 36.16 from 2016 to 2025. These are all the recent announcements too. Yeah, you can scroll down, please. This is all the recent announcement of the government and the growth drivers which are putting up the infrastructure segment in the driver's seat. The financial overview, and this is about the total income, and would request Mr. Rajnikant to help in this.
Yeah. Thank you, sir. Happy evening to all. Welcome to the online roadshow. So, would like to just take you through the financial statement. If you could see that the financial year 22 to 23, the jump of the revenues could be almost like an 80%. And this year we were already reaching 69 crore, and we were expecting another 60%, 55 to 60%. We can expect the turnover for this year. And if you're coming to the EBITDA, EBITDA is always positive on the last 3 years, including the stub period. And PBT is also we are showing in a better thing. And the net margin, it's been grown from year on year. We can clearly say that the reason for growing on the revenues due to the controlling on the fixed cost. As and when the grows on turnover, our fixed cost is remains constant, maybe in a little bit here and there increase. Visa-wise, we can see that there is a good result which has come into the company. I would see that there is a growth from 6.25% in terms of net profit margin to 10%, 10.84 in 2023. And already we have achieved in 7 months 12.06 with the order book. And as MD said that there is a huge potential in terms of growth. I think we can able to achieve the expected level, as well as maximum we'll try to retain the or sustain the profitability based on the further financials as well as the operational control. And these are all the balance sheet which talks about the net worth has been increased from 6 crore in the financial 21 to 33 crore for the 7 months financial conclusion of FY24. and the borrowings are increased slightly because the working capital is the major criteria as far as the company is concerned. So it requires either from the money has to be pumped by the financial sector or from the management. But in this case, the most of the funds are coming from the outsiders, that is from the banker side and the NBFC side. So which gives the strong confidence to the company that we can able to grow the turnover as well as the increase the performance. Vis-a-vis, you can see that there is a trade receivables, which shows that like 2 to 2.5 months is the trade receivable which is lying, and most of the projects are government driven, so the collections are coming in the phased manner. However, we don't see that any drawback in terms of receivables. We can see that from the financial year 21 to 24, the trade receivables are maintaining between 1.5 to 2 months. These are all the cash flows which has been defined from operations, from the investments, and also the net cash flow. And most of the cash flows due to negative because of the collection which got a little bit time consumption. Otherwise, the financials are well controlled and even the cash flows. And these are all the pictorial diagram which can show the growth of the return on capital employed and return on equity and the debt equity ratio compared with the F21 to 7 months later. You can see that there is a dip in the debt equity ratio. Now the company is purely depending on the internal accruals as well as 1.96 time on the debt from the external thing. Current ratios are well maintained, which is well within the acceptable norms of the standards. Inventories are kept increased because we need to complete the project on time. So it requires enough material has to be procured well in advance and keep it as in a stock. These are all the pictorial diagram. And this is a consolidated profit and loss account. Last financial year, that is FY 22-23, AVP has taken 90% stake in the AVP RMC, which is a backend integrated company. So for that, as per the law, we'll have to prepare a consolidated financials. You can see that 114 crore was done in FY 23 consolidated turnover, and for the 7 months result, we have already achieved 74 crores, and the PAT margins, that is net profit margins, are increased by almost a percent, 1%, which is 10.48 to 11.56 compared with the 7 months. And as per the MD's instruction or MD's vision, the turnover can keep on increasing because they are continuously taking the orders, so that we can able to show a better margin in the upcoming periods. These are all the consolidated financials, both partnership firm as well as the limited entity. This shows the consolidated financial, cash flows. These are all the comparison on the peer side. There's a glimpse of the investment rationale. I think I'd like to invite Prasanna to take care of this.
Yes, sir. Thank you, sir. Thanks for the detailed vision about the financials of the company and our unveiling our business approach in the coming days. We would like to expand our geographical network. We are present at present. We are located just in Tamil Nadu, and we have our operations carried out only in the state of Tamil Nadu. And we are started tendering outside Tamil Nadu. We have applied for a bid in the state of Telangana for around 350 crores, and we are also filing for other tenders in other states, in the nearby states, and wherever strategically we can be present. And we are focusing on the cost efficiency and increasing profitability by upgrading the technology. For we are going for newer machine, technologically upgraded machine, and we are also planning to enter into joint ventures wherein we can bid up to 1,000 crores, so that we can also will be able to tap some bigger projects in this coming year itself. And we have also looking to expand in the other industries like power sector and warehouses sector and all, so that we will be able to grow in a further rapid way. Which are the next slide, please? And about the issue overview, I'd request Mr. Ronak from Share India to share his views on that.
Thank you, Prasanna sir. I'll just give you a glimpse about the issue. So we are coming out with a fresh issue. There is no OFS in this overall arrangement. So total 69 lakh 79,200 shares are to be freshly issued of a face value of rupees 10 in a price band of 71 to 75 rupees. The lot size as per exchange rule is 1600. So on the upper price band, we will be raising around 52.34 crores for the company. The issue for anchor investment begins tomorrow, and issue for normal public opens on 13th and closes on 15th. So post issue promoter, can you go back to the earlier slide? Post issue promoter and promoter group overall holding will be 62.33%, while the public will be 37.67%. Next slide, please. The gross proceeds, it is expected that 30% of the money will be for the capex purpose, that is the capital equipment company wishes to purchase, and balance will go for working capital and general corporate purpose. Yeah, these are the intermediaries. So we are the BRLM for the company. Registrar is Purva share registry. A federal bank is the banker to the company, and Axis Bank is the banker to the issue. And Share India, our parent company, is the market maker to the issue. Thank you.
Thank you,
Uh,
Ronakji.
yeah.
Thank you for the excellent presentation. Now we'll start with question and answer session. I request all the participants to please post your questions in comment box. So first question is from Ms. Bharti Agarwal. India's infrastructure market is growing. Let's see what's the company is offering. Next question is from Kojan Finvest. The way infra segment is growing and inflow of road winding, there will be a huge opportunity for the companies like AVP in their local markets.
Yes, thank you, and hope we are also expecting the same.
Move on to next question from Bumper Robert. What is the total order book of the company and the current bidding pipeline of the company?
Current order book stands at 200 plus crores, and we have tendered for around 500 crores of work in the recent days, and we are also tendering for around 150 to 200 crores in the coming week. So we have 700 crores almost bidding pipeline as on date.
Okay. One more question from Bumper Robert. What is the executive period of the order book of the company?
The
Execute.
order book of the company is anticipated to be completed in a year from now.
Okay. Move on to next question from Kojin in Finvest. What is the largest project the company has done?
We have completed a work of around 50 crores as a single order.
Mm-hmm. Okay.
Sir, here I want to intervene. If you can give a glimpse that in individual capacity, how big project we can bid, and if in joint venture, how big a project we can bid for.
Yeah, at this stage, we can bid up to 250 crores of work as a single work. in our own individual capacity, and we can bid up to 1,000 crores in a joint venture arrangement with a bigger player.
Okay. Next question is from Amit Ananya Swaminathan. How much capital plans contribution to cost realization?
Cost rationalization, we can definitely say we are saving around 5 to 6% of our project cost in our own plant and machinery.
Okay. Move on to next question from Mr. Ganesh M. Currently, how many fleets do you own?
We have a fleet of around 130 plus as on date.
Okay. Move on to next question from Vidya. Do you give any special training or skills to your employees?
We have a periodic training session for our engineers and as well as our quality control staff. And this is carried out by HR trainees and as well as from technical people every 6 months once. It will be a 1 day session and they will be given all the technical training and the latest technological improvement in the industry.
Okay. Next question is from Mr. Jatin Mehta. Please explain promoter's background and experience in the field.
Three of us, we all belong to same background. We are all from engineering background, and we've been in this industry for the 15 years, for the past 15 years, and we have been first generation entrepreneurs, and we have taken up some experience only based on the field experience, and it's going on well with us, and we'll be adding more and more expertise in this field with the experience what we are learning through.
Okay. Next question from Kojin. How much we are eligible to bid in the single project as on date?
220 crores to be very precise. 220 crores can be our bid size, single project.
Okay. Move on to next question from Ankita. From Ankit. We have seen continuous improvement in EBITDA margin over past few years, and in past 7 months, it touched 21. Which is your outlook going forward? Is it sustainable? What is your outlook going forward? Is it sustainable?
We are working towards it. We want to sustain this EBITDA and we want to maintain this EBITDA margin for the welfare of the company and as well as for the welfare of the investors.
Okay. Move on to next question from Dipka Chatta. Can you share some examples of recent projects that have made a big difference in local areas?
I'm sitting at Chennai. My head office is at Chennai. We have executed a project in Chennai itself. This we have completed in the recent past. It is from Chennai Bangalore. But as you all be knowing, the Chennai Bangalore highway in the south state have highest traffic, wherein the port of Chennai is connected, and it was a 4 track road. Already existing road was 4 track, and we have completely converted it into a 6 track, which have made a vast difference. There is no logging of traffic or traffic jam in the recent days, and we have got this dedicated to the nation by the Prime Minister 2 months ago, and we are proud we are a part of that project.
Okay. Next question is from Mr. Bumper Robert. What is the amount of road projects you are seeing that will come in state of the Tamil Nadu Prasanna, sir?
So we are expecting a average of 10,000 to 15,000 crore of road projects in size of commercials involved will be coming up in the coming year, and this will be average to start up with, and it will be in the increasing trend.
Okay. Next question from Ms. Vidya. How do you deal with challenges like bad weather or or changes in government rules?
Bad weather is inevitable. We have to accept the fact that we are no superior than the superpower, and we have to face the bad weather challenges. We have a planning team planning in such a way that we plan only 25 days of work in a month, wherein 5 days of work, 5 days we have it as a cushion, and we have turns to take up our holiday period works. We have overtimes to be taken up, and we meet up with that to cover the bad weather phase due to rain or flood or something like that. Changes in government rules, we are not taking up smaller works wherein mostly the local government politicians would be involved. We are taking up National Highways and National Highways Authority of India works wherein the government change won't be affecting much of us.
Okay. Move on to next question from Yash Mistry. Can you give breakup of revenues from contract and sold capacity and JV capacity?
So we have been making up 100% of our revenue from our sole capacity only till date, and we are entering into JVs in the recent times only.
Okay.
And our revenue may be 10% from the JV capacity.
Mm-hmm. Next question is from Bumper Robert. Post IPO, how much bid capacity we will be having?
The bid capacity remains the same even if it is going to be after the IPO, post IPO or pre IPO. The net, I am talking about the technical qualification of the company. The commercial qualification of the company will be the net worth increase will put up self to take up work bid capacity of around 300 crores to 350 crores. But still, our technical qualification will be standing at the same 250 crores, which can be increased in the next year.
Okay. Next question is from Sudeep. If RMC business is in AVP Infracon or in a subsidiary, please give details. What are RMC business EBITDA margin?
RMC business is in a subsidiary concern, and AVP Infracon holds 90% of the stake in AVP RMC, which is the subsidiary concern. And I'm not very particular about the EBITDA margin of RMC business. I'll be able to give you a detail about that after going through that.
Okay.
You can help Mr. Sudeep in the later stage.
Okay. Next question is from Cogent Invest. Any kind of diversification the company is planning to reduce its risk of single state and single line of work?
Yes, we are planning to go expand our working level and working state. We are already tendered in Telangana. We are also participating in Kerala and Karnataka in the coming days. And we are also planning to diversify into other line of work like infrastructure, different different vertical like warehouse buildings and warehouses, buildings and power projects and irrigation and something like that, apart from roads.
Okay. Move on to next question from Neeraj. Uh, with the projected growth in India's infrastructure sector, how do you plan to scale your operations and maintain your position as a leading player in the industry?
Projected growth in India's infrastructure, we are planning to scale up our operations by 50% to 60% growth every year on year. And we would like to maintain the position in the pole as a leader in the industry, foreseeing at least 1,000 crore of turnover in the next 2 to 3 years of time.
Okay. Move on to next question from research. What are your regional diversification plans?
We are planning to diversify into the southern states first. We are operating in Tamil Nadu. We are planning to go into Karnataka, Kerala, and Telangana, Andhra Pradesh, and we would be also planning to go to other northern states if we are if we are finding out some projects uh, that are viable and executable for us.
Okay. Next question is from Mr. Arjun Verma. What is your working capital requirement?
Our working capital requirement will be around our 3 months turnover.
Okay. Move on to next question from Bimal Gandhi. What is your RMC plant capacity and the capacity utilization?
RMC plant, we have two sizes, with 1 cubic meter and 1.25 cubic meter. We are utilizing at least 70 to 75% of the production capacity.
Okay. Move on to next question from Kojan. Also, how much is the investment done in RMC plant and our main object of having two different RMC plant?
So the investment done in RMC plant would be roughly around 10 to 15 crores, and our main object of having two different RMC plant is just for the market expansion. We are having potential market. We have first established in one city, Tirupur, and we have many orders coming up, and we have good orders in the Coimbatore city also, and so we have established one more RMC there. And we are also looking up to establish few more RMCs based upon the requirement. And we are having a very potential market as the entire country is moving towards construction segment, and we want rapid construction to be done.
Okay. Next question is from Bharti Agarwal. What are your revenue target year-on-year growth for FY24 and in FY25 and may going ahead?
We are expecting around 50% to minimum 50 to 60% growth year on year from the current position.
Okay. Our next question from Mr. Siddharth Iyer. Can you provide more details about the bidding capabilities in terms of EPC contracts, both in sole capacity and with joint venture partners?
For EPC contracts, we have a bidding capacity as an individual person to around 300 crores, and we can go up to 1,000 crores in joint venture partner again.
Okay. Move on to next question from Bimal Gandhi. What are the quality parameters you ensure for your RMC supply?
We have a very strong quality control team. From the starting of the batching of the concrete till it is till the pour is completed and till the results are obtained, we maintain stringent quality control standards, and it has been maintained by a quality control team. The results of the concrete tests which have been carried out will be shared with the clients, and we ensure that this is taken up even if it is going to be a smallest of order, even from a 1 cubic meter order till 1,000 cubic meter or 20,000 cubic meter, whatever may be the order size. We are strictly carrying out this quality control measure.
Okay. Next question is from Connection Network. What will be post-money valuation of the money and dilution?
After the dilution of IPO, we are holding 62.3%, and post money valuation of the company will be around, we are looking for a valuation of around 200 to 20 crores.
Okay. Move on to next question from Janam Savla. What are future growth drivers?
Infrastructure segment always have a very strong future growth, and we would like to sail with the tide itself. And we have a very strong drive in multiplying the top line of the company, and we will go through the uh, wave of the infrastructure segment.
Okay. Next question is from Ananya Swaminathan. Of your 100 number of employees, how many are on roll and how many on contract basis?
All the employees are on roll employees only. We have contract employees, those who are execution staff, those who are engineers, quality control staff, and execution supervisors. We are all by design people are all on our roles, and the execution staff in the size of the road execution and these labors, they are all on the contract basis.
Okay. Next question is from Neeraj J. Any new technologies you use to make construction projects better and faster?
No, we don't have any much. We use the advanced technologies, and we are looking up for new technologies to come up. But we are always using this conventional and the most technologically advanced technologies as of now.
Okay. Move on to next question from Knowledge Corner. We have done revenue of 70 crores and profit of 8 crore. Can you please provide us with a figure of 11 months of operations or at least till December 23? 9 months.
Till December 23, we have crossed the earlier years, top line, and we are at present we are around 135 to 140 crores stage.
Okay. Next question is from Mr. Jatin Mehta. How your receivables days?
Receivable days is normally we average it at 60 days. We get even at 30 days. We get even at 70 days, 75 days, 90 days also. So we average it at 60 days.
Okay. Move on to next question from Yash Mistry. Do you have annuity-based contract or any or only project execution?
No, we don't have any HAM projects as of now in our order book, and we will be able to take up HAM in the coming years.
Okay. Move on to next question from Web of Creations. Where do you see the company 5 years down the line? What are your strategies to achieve targeted growth?
5 years down the line, we would like to see a company in the main board, and we are expecting turnover of more than 1,500 crores at least. And we have a very clear strategies to achieve the targeted growth, and uh, we are working on those strategies. We like to implement the quality of our work at any point of time, and we like to meet the investor also at the same time. And the strategies are well planned and would be well executed. You can see over a period of time in the company's growth.
Okay. Next question is from Bumper Robert. Effectively, we can see doubling of revenue in next 1.5 years. If we are executing our order book in 1.5 years, is my understanding is correct?
We have an order book which should be completed in the next 1 year. And what your projection is, we will be doubling in the next 1.5 years or some, and so. And what we have calculated is 100% correct.
Okay. Next question is from Ganesh. What are your competitive strengths? Who are your key competitors in the area of your operations?
So there are many to mention as key competitors in the areas where we operate and in the size of the industry in the infrastructure segment where we operate. There are many people to name at least 20 to 20 or 25 people around the country. And we have a very strong execution team and a planning and execution team. Our execution team takes care that the project is completed on date and we don't miss on any timeline. That is the core strength, and we have been receiving the bonus for performance of the earlier completion of the project on most of our projects, and that is also a reason for the strong EBITDA, and that is the competitive strength which we like to boast about us.
Okay. On to next question from Pojin. Average EBITDA margin in road industry is around 16% to 18%, and we are doing EBITDA in north of 20%. What is the major reason behind this, and can we sustain this margin going forward as till FY 22?
Yeah, we are working in a strategy to maintain this EBITDA and to maintain the and to increase the EBITDA of the company of what we are having. The major reason behind higher EBITDA is we owning most of the fleets and we taking care of the execution. And we don't give up with subcontracts mostly, or what the other players, leading players will do. We take the we take the pain in executing the work with our own team, and we are getting the profit for that too.
Okay. Move on to next question from Mamba Robert. How quickly we can do the developments once we get the projects in TN, and it will be same for the other states also, or we will have some differences.
Once we get the letter of acceptance, LOA we call it, will be able to start the work from 45 days from the date of LOA, as we will be entering into an agreement, and the handing over will be done only after the agreement, and all the deployments we plan it during this time. Once we get the LOA and when we enter into the agreement, it will take it 45 days. During these 45 days, we will take care of all the plant and machinery deployment, and will be so kickstarting our work in 45 days. And hopefully that will be the same time for anywhere in India. There won't be much of differences. And as if infrastructure is concerned, we don't need any upfront approvals for any pollution control or something like that, as it will be site projects, or whatever machinery what we are installing will be site based. And even if there's going to be any approval based, that won't be taking much of time. Nowadays, we are getting those approvals on time. There are cases where land acquisition or utility shifting that may get delayed, but nowadays central government has come up with a very good policy of calling for the tenders only after the site is clear, the land acquisition is done, and the utilities are shifted, and only if it is going to be a good to go site.
Okay. Move on to next question, Janam. When you are planning to take a project worth 1,000 in JV capacities, what would be our role in such contracts?
See, there are two cases wherein we enter a JV with a JV partner, where he lends only his name for the credentials and he takes a royalty, where we execute the entire project, or else he may also demand for a certain percentage of work to be executed by by himself. In such cases, we always are very much clear that we don't go into a combined work. We segregate our stretches. For example, if we are taking a project worth 100 kilometers, And our JV partner, if he's requesting for 40% or 60% work to be carried, if he is going to carry out 40% of the work, we will give 40 kilometers to him and we will take the 60 kilometers, and that stretch will be maintained by us. That will be the case.
Okay. Uh, I guess we have covered majority of questions. I will conclude this. The company looks great and the promoter looks confident. All the best for the IPO.
Mr. Mystery. Thank you, Deepika.
Thank you, Prasanna ji, Ronak ji, Rajnikant ji, for giving insights about the company and IPO to the investors community. And thank you, investors who participate for the IPO roadshow. Thank you once again.
Thank you,
Thank you.
Pooja. Thank you,
Thank,
Prasanna sir. All the best. Thank you, Ronak
Thank you.
sir.
thank you, everyone. Thank you for joining us.